Are you wondering what are continuing values? In this video, we look at what continuing values are and why we need to calculate them. The quality of our financial statement analysis will be based on the extent to which we are better at predicting the future of a firm to eternity than other equity investors in the capital markets. Given many equity investors give little or no attention to this task, gaining real skills in this may give us an edge. It may allow us to know what adds value better than many others. To be able to value firms using the discounted cash flow and economic profit models, we need to be able to forecast a firm's future abnormal operating income and cash flows to eternity. We know growth in expected abnormal operating income is driven by increases in the return on net operating assets relative to the cost of capital, weighted average cost of capital, and by increases in the book value of net operating assets. Usually, we can only meaningfully forecast a firm's abnormal operating income for a short period, for just a few years. However, if we base our view of the value of a firm on the present value of just a few years of abnormal operating income, we would be omitting a large part of the value of the firm. An equity interest in a firm entitles the investor to returns to eternity, not just for a few years. To overcome this difficulty, we need to calculate a continuing value for a firm beyond our practical forecast horizon for forecasting abnormal operating income. What lies beyond our forecasting horizon for our firm? The answer is, we do not know. We cannot predict it by forecasting the economic and business drivers of a firm and relating these to the firm's accounting drivers, that is, to a firm's financial numbers such as return on net operating assets, and hence to a firm's value. What lies beyond the horizon is speculation. So what do we do? The answer is, we guess. We guess because we must, and we guess because we think we can do it better than many others in the equity markets. Indeed, these guesses are the judgments we can often make better than many others, and so they can be a key way we can make money and contribute to our community by allocating capital well. We have seen the need for guesswork in analysing financial statements as we move beyond our forecast horizon and extend our imaginations into eternity. We need to estimate continuing values for firms on the edge of our forecast horizon to capture our speculation about what may lie beyond. In the video, The Benefits of Using Continuing Values, we look at how we can practically determine continuing values when calculating the present value of abnormal operating income and the value of a firm. For further information on why we need to calculate continuing values, go back to Chapter 7, Section 7.1 in the study guide, and also review How to Predict the Future to Eternity weekly questions. Also answer, write, and rate questions on how to predict the future to eternity in Peerwise.